Natural gas prices dropped recently due to high global inventories and mild winter forecasts tied to El Niño, reducing seasonal heating demand. BOIL and KLD ETFs, BOIL leveraged long and KLD leveraged inverse, remain volatile, suitable for short-term traders seeking amplified exposure to natural gas price shifts. Risks include rapid losses due to compounding effects over time. UNG ETF offers unleveraged exposure to natural gas futures, a steadier option for investors focused on longer-term trends without leverage. AI and data centers, with their rising energy demands for computing and cooling, are becoming a significant driver of natural gas consumption, especially in regions with limited renewable or nuclear energy capacity. Unlike heating demand, which is seasonal, data center reliance on natural gas for scalable, consistent power is constant and growing, intensifying natural gas's role in energy markets. G'day folks, welcome back to another update for natural gas. Before we go any further, make sure you hit that like and subscribe button to support the channel, and stay to the end of the video to see what we offer on the Patreon page. So first off, on the monthly, weekly and daily charts, on the monthly first off, we're still bullish momentum, with our CCI broken above its moving average band, and likewise the prices are fresh breakout this month above that moving average band as well. On the weekly, it's been bullish now for a number of weeks, since early September, on the CCI 150 still above its moving average, and likewise the price is still pushing higher. On the daily, however, after being bullish for a number of weeks, it's actually finally broken to the downside after hitting this resistance up there. If I just play that up at 36.34, hit that major resistance, and it's actually bouncing down, approaching this minor support at 30.96. You'll notice as well that the CCI is actually broken through the moving average range on the daily, giving us a fresh breakout to the downside for short trades only on the intraday. Now if you go to the intraday charts, first off, again, as I said, we always trade in the direction of the higher time frame. So if you're trading on the intraday, in this case we're looking at the 1 hour, you take short trades only in conjunction with that break below the moving average band. So here, for example, you would have taken short positions from that point when the CCI broke on the 1 hour, and that was below the CCI moving averages and also the price moving averages. And at the moment, it looks like you'll be closing out that position in the next hour or two once it hits that moving average range. I prefer to hold off until it actually enters that range, and then, because sometimes it can actually touch it and then drop down again. Or if it does enter that range, just wait for it to break to the downside again to enter short again. But at the moment, that would have been a nice little trade to take from that entry there, assuming you entered it there, down to where we are now. That's a 7.3% gain if you're going short. So again, always trade in the direction of the higher time frame. Also, I drew a Fibonacci range here between that low and that high, and that was because of this. In that point there, you can see lower highs on the CCI versus higher highs on the price, and that was our minimum target range. It actually broke through that before our last video, and that went as low as a 50% before it bounced. It had a bit of trouble keeping its momentum to the upside, and then it actually started falling from there, and now we're still in a decline, as I said. Next, we'll look at BOIL. There's no CCI on the monthly, but you can see there it's very bearish on the price chart, well below its moving average band. On the weekly, we do have this bullish divergence on the CCI versus lower lows on the price. Hasn't actually made any huge move to the upside yet, but we'll keep an eye on that, and that's still a bullish movement on the CCI at least. And we're going to consider that a bullish divergence so long as that keeps rising. Even though if the price keeps dropping, we're going to consider that a bullish divergence. On the daily, we had a few bullish divergence here. You can see there, it's a bit hard to read on this chart, but is that those lows are higher than those lows back there versus lower lows on the price after hitting that support at 35.98 and made a bounce. Now the more recent one was this little Fibonacci range here between that support and resistance line. You can see that I've drawn a little rectangle where that 23-38% minimum target is, and in this case it went just around the 61% retrace, and it started falling from there. So that would have been going long positions only on that one there. Now at the moment it's broken into the moving average range, so you would have closed out your positions if you're trading on the daily. Now if you go to the intraday charts, you would not be entering any trades at the moment. Wait for this to break to the downside on the moving average on the daily before taking short trades. At the moment, that's very tempting. You could actually, it's more luck than anything if you enter there. So again, there's no guarantees in any of this, but you would have been going long from the 11th of November. So from back here, you would have been going long during these periods, taking long trades only. And that would have been the last couple of trades there. Enter again there, and you would have got in and out at those points there. There would have been a false break there, and you can see there that would have been a false break, and take any stop losses at below those levels there. And again, like I said, don't trade in the opposite direction of the daily. Always trade in the direction of the daily. And in this case, we're neutral, so avoid going long or short until we see a breakout of that moving average range. So for KLD, there's no CCI for it, but you can see that it's broken above the moving average band, giving us a bullish signal. On the weekly, that was on the monthly. On the weekly, we've got had another bullish divergence here. You can see the CCI keeps rising versus that lower lows on the price. It bounced. And just follow the CCI. At this point, you can see that it's actually broken to the downside on the price, but the CCI is still rising. So that's the weekly. So wait for it to break to the downside if you're going to take short trades on the daily. Remember, always take the trades in accordance with the higher time frames. If you're trading on the daily, trade in the direction of the weekly. On the daily, if I zoom in, you can, at the moment we're bearish with the CCI below its moving average. You notice there it's actually broken into that moving average range, giving us a neutral signal. So avoid going long or short until we see this either break to the downside again or break above that moving average range. And I'm just looking to see if there's any divergence. There's no divergence to talk of at that point there. If we go to the intraday charts, again, avoid trading any direction at the moment until we see this break above or below on the daily. And back here, always look at these divergence. You can see one there. There's lower lows on the price versus higher lows on the CCI. Now, I don't trade these. You can, but they're a bit iffy. I prefer not to trade them because I look at it this way. If I'm going short during this period, for example, and I start seeing a bullish divergence like this, down this area somewhere, typically I would get out, like I said, my preference is getting out when the CCI hits that moving average range. So I would have got out on that candle. But that's assuming you're still in the trade and riding it to the downside. And I start seeing a bullish divergence, then I'd start paying attention and, okay, that low is higher than that low versus the price. This, of course, could keep dropping like it is on the weekly, but you're playing a bit of a risky game at the moment if you're doing that. So I prefer to use the divergence more as an exit strategy. And lastly, on UNG, the price is below its moving averages, giving us a bearish signal, but notice the CCI is neutral, has been that way for a number of, or some time now, within that very narrow moving average range, so a neutral signal on the monthly. On the weekly, we did have this bullish divergence, higher lows on the CCI versus lower lows on the price. And that's what I mean by the price can keep dropping in this case. As long as the CCI keeps rising, we're going to consider that a bullish divergence. That's the weekly. And on the daily, you can see that's also broken into that moving average range, giving us a neutral signal. There's a lot of neutrality at the moment on the natural gas price. Except for the daily, it's giving us a fresh breakout to the downside on the daily. But again, UNG, we look at the intraday. Again, avoid going long or short until we see more decisive movement to the upside or the downside on the daily. But at the moment, you'll notice here as well, that's broken to the downside on the hourly. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again and see you in the next video.